Hello, it is Sunday, July 5th, day after Independence Day in United States. Um, S&P 500 was up 1.5% this past week, meaning that in 1 year it is up 5.28%. Last week we saw some historic job numbers for employment. Um, Elon Musk was having fun tweeting as usual. Several United States airlines reached deals with the Treasury. Um, Also, Microsoft announced that they're going to be closing all of their stores, physical stores, and repurposing a few of them. Um, Electronic car maker NIO was up big last week as they reported higher than expected quarter 2 deliveries. Of course, COVID is still out and large. More cases are occurring across the nation and globally. More companies are also dropping their advertising from Facebook um, due to their lack of being able to handle political posting. And also, billionaire investor, hedge fund manager, and founder of Bridgewater and Associates said that we could be in, quote, a lost decade for stocks, unquote. So it'd be something interesting to see how that follows through. So I'll be picking another stock for the week to analyze. If you didn't see the other videos, I've did some fundamental analysis on Uber, CenturyLink, and Abbott Laboratories. So for this week, we'll be analyzing, surprise, it's Spotify. Should be very interesting. Today we're going to be talking about Spotify, stock symbol SPOT, who recently IPO'd back in April 3rd of 2018. They opened with a share price of $165.90, closing that day at $149, giving them a valuation of around $29 billion. And interestingly, they were not underwritten by any banks, which could potentially be a recurring trend for IPOs in the near future, because it allows them to not have to pay those hefty fees to the banks to get listed. So Spotify was founded by Dan Eck and Martin Lorenzen in Sweden back in 2006, and they officially launched their platform and 2 years later. So here's how they say it in Sweden.
Spotify. Spotify.
So their headquarters is in Stockholm, Sweden. They have another headquarters in the United States at New York City. And their legal HQ is in one of the richest countries in the world, Luxembourg. So essentially, their streaming platform, they pay royalties as a percentage from the total artists that are on the platform, and they distribute about 70% of their revenue to the right holders, who then trickle down to the artists based on the individual contractual agreements. And some of us may remember they've had run-ins with Taylor Swift, who was complaining that they don't give enough rights or enough revenue to the artists themselves. So of course their growth has been on the rise since their inception. Here's some of their acquisitions, big names being rapper Joe Budden, and then recently huge acquisition where they bought the Joe Rogan Experience for nearly $100 million. So here is Spotify's website. Yeah, of course you can sign up premium free for 1 month, then $10 depending on, or more or less depending on the plan that you get. And just like every other subscription service out there, free just allows you to listen to the music, but it's gonna be filled with ads. Then you can obviously pay more to get more accounts, more features, and of course student discount as well from an accredited higher education, no institution. Yep. And I thought this would be fun. We can look at the top global hits of 2020. Looks like Dua Lipa is the photo. So yeah, the Weeknd's just been crushing it, as we are in the weekend. Then yeah, Dua Lipa, Gaga, Harry Styles, a lot of familiar names. Looks like a lot of just pop music is crushing it. Spotify at least, globally, just lots of pop. Black Eyed Peas, they're still making music. Of course, the Biebs. Lots of pop. Maybe some, yeah, here's some rap. Yep. And, oh, it's a playlist. 2 hours, 42 minutes. Here's a real cool website you can do some great research on, businessofapps.com. Here's just some statistics as of June, so a couple weeks ago of this year. Yep. So yeah, 286 million total monthly active users. About just under half of them are premium subscribers. And of course you can see growth every single quarter. And then of course monthly active users by region, majority is in Europe, percentage-wise, followed by North America, Latin America, and then rest of world. Subscribers is about this same terms of rank. More graphics, and then yeah, they actually are ahead of Apple Music, but they did sort of had a head start, I guess, since Apple Music was in 2015. They have almost double the amount of subs, and they're growing faster at a faster rate. And as you can see, Spotify pretty much dominates the paid streaming markets globally. And as you can see here, 2019, so just last year they surpassed Pandora in terms of total users, and Pandora's just falling while Spotify's going in the reverse direction. And then this real cool graphic. Average unique artists that they listen to is growing up. Essentially, it looks like just a growing industry, at least globally, really. As people, it seems, are fading away from television and trying to find more forms of entertainment. Yep. Then Spotify devices, yeah, in every region it's mobile is the majority of users. Of course, Apple Music has more songs because they have a lot more money to play with. Their free cash flow is through the roof compared to all their competitors. And this is cool. Top songs to reach 1 billion streams. Looks like mostly pop and rap. And then most listened to artists by year. Pretty much dominated by Post Malone, Drake, and Ed Sheeran. And Macklemore back in 2013, for those of you that remember him. Just some real cool stats. Thanks, Business of Apps. And of course, one of my favorite resources, Yahoo Finance, to do some financial research on public companies. So yeah, looks like they're now trading at $271.50 a share. They're up nearly 5% on Friday. So yeah, they're up a decent price if you bought them back when they IPO'd. And they've been crushing it this year. Nearly doubled since January 1st. Here's some news. As you can see, revenue growth is growing vastly year over year. Looks like they're not necessarily making net income every quarter. So it'll be interesting to see how they can grow and if they can get that number higher. So you can see their market cap has fluctuated each quarter. Margins aren't exactly positive, but it's nearly break even, so they're not that far away from becoming a pretty successful, reputable net income company. Revenue growth is up, which I would hope so. If the whole industry is growing, you would expect their revenue growth, but that's still a respectable number, pretty high up there. Book value is pretty low compared to their share price, so I'm not a fan of that. And then we'll look at their financials. So this is annual. So yeah, annual top line is growing vastly every year. Cost as well. And then of course their net income. They haven't been profitable since their inception on an annual basis, but it does look like quarterly they have actually made some net income on individual quarters if you break it down. Balance sheet. So they have just over $5 billion of assets, which has been growing every year. You can check out their cash flow statements. Cash flow has been positive each year, so it's cash flow growth, and they actually have a decent amount of free cash flow, which is really good for a growing technology company, especially in 2020. So one cool source that I probably don't use often enough, Seeking Alpha. I'll use them to look at their peers or competitors, which are of course Tencent Music, which they actually own about 40% of the Tencent Music, who's a recent IPO. Of course, SiriusXM, who has huge deals with almost every major automobile company. And then Netflix, whose main focus is video, but I guess they're considered a peer since it's a form of entertainment. You can see the market caps. They're double over their audio streaming services, but nowhere near Netflix, who obviously has way more assets than them, so I wouldn't expect them to be more anyways. Their employees is about the same as their close peers, but nearly half of Netflix. You can see the price comparisons, price to book, revenue growth. Very interesting. It's actually almost eeringly similar to all their competitors. Almost too close. That's year over year. And then of course earnings is dropping. Tencent Music doubled. Wow. Look at Netflix, almost through the roof. Their margins are very comparative. That's pretty respectable for SiriusXM. Of course, net losses. You can see them pretty much. If you bought them any point in this past year, you're doing really well because they've been dominating the markets this year. A lot of numbers that we already saw. Total cash, it's good to know that they have well over $1 billion in cash. And then book value is actually the highest compared to their competitors. So admittedly, I don't know too much about technical analysis, but I can say what I see. So this is since beginning of this year. It's fluctuated up and down, and then ever since looks like beginning of May they had a huge run, and then June just tremendous run, nearly doubling since the beginning of June. And of course, lots of tall green candlesticks. Check out a weekly, so that's since their inception in 2018. Lots of red to end the year, which the whole market was down in the final quarter of 2018 anyways, so. And then just typical fluctuations, then huge run in June. Very tall green candlesticks. Could be a warning sign, or it could just be a run up, but it may be getting overbought, so it'll be interesting to see what happens in the coming weeks. Here's some analyst ratings. Citigroup, who's giving them a rating of about what their price is at right now. Sell, buy. Overall, looks like positive ratings for the company. Here's some market beat analysis. I wanted to look at their historical revenue and earnings. So these are all actual reported growth nearly every single quarter in terms of revenue, and then generally accepted accounting principles EPS. They've fluctuated from positive to negative. It's a semi-highly competitive industry to be in, and they're still trying to find their place in the markets with acquisitions and possibly putting more focus on podcasts and potentially video maybe in the future. We'll see. And then I like this MSM Money mainly because of this analysis, management effectiveness, and you can see I really love this stat for some reason, the income per employee, which I'm sure was on other sources, but I just like looking at it here. So obviously net loss, where the industry is doing far better than them per employee. Here's some tip ranks analysis. And tip ranks can be pretty harsh critics, so for them to be getting an outperform rating of 8 is respectable. Hedge funds looks like have been decreasing their ownership. Otherwise, lots of good sentiment, very bullish on opinions of bloggers and analysts. Yeah. Hedge funds, yeah, so here we can see the individual hedge funds. For any options traders, I just wanted to show that they are optionable. So yeah, they trade monthly, expiring on the third Friday of the month. So they're 270 right here. I'd say fairly reasonable prices, kind of expensive, but yeah. Thank you, Morningstar. Here's some ownership. Their major owners, Vanguard being the largest fund holding this company in terms of percentage of shares held. Looks like Morgan Stanley, T. Rowe Price. And we can look at institutions. Yeah, Morgan Stanley shows up again, T. Rowe Price, BlackRock, of course, JP Morgan. So lots of huge, some of the biggest funds and institutions in the world are buying into this company. And of course, I always like to check out their social media presence. They have a very strong 3.6 million followers. Spotify cares. Black Lives Matter. Oh, that's cool. They're going to be playing some of Lin-Manuel Miranda's Hamilton all weekend. Remember Pop Smoke, great artist. Let's look at their competitor. So they have 3.6 million views. Pandora, slacking. 526K. Far behind in social media. Yeah. So now we'll see how well I'm going to place this company on my tier list. So we've reviewed Spotify, from their inception to their current standing. Overall, decent company, solid growth, top line at least. While they're struggling, not necessarily struggling, but they're not making net income every quarter as you'd like to see in some of the top tier companies. They do have great potential, lots of belief from institutional investors and funds. They've had a huge recent jump in the past month, so it could be a sign that it's being overbought. Great management. It's always a good thing when you see the founder still at the helm of the company after a decade, so he obviously has belief in the company. But it's a highly semi-highly competitive industry, and any of the big names could easily just jump in if they wanted to, and take away market share from Spotify. So they're gonna have to make some big changes in the coming year or so, I feel, to be able to maintain their presence in the industry. Otherwise, they could just find themselves getting bought out by the large corporations that want to take away their market share. But overall, and of course I think it gets hurt by them not paying dividends, which is something you like to see in some of the largest companies in the world. Not that I would expect them to, but it's just reason why I'm not going to rank them as high as I would. But overall, place them here. So yeah, I definitely like the company short and midterm, but I don't see them lasting forever, because I would definitely see some of the real big names entering the industry or taking away their market share. So great company to be a user of or subscriber of, but investor wise, it could just be a swing trading play where you just buy and sell based on the share price volatility and volume. But I think it's a fair rating of them to be in this tier. Yeah, thanks for watching. Have a great week.